After a $30,000 decrease in November, the benchmark price of a single family home in Kelowna slid another $25,000 in December. And while a seasonal softening of prices is expected in the last quarter of the year, this is the third month in a row that we've seen a decline, and we might be seeing more of a trend and not just seasonal behavior. In this video, we'll take a look at what happened in the Kelowna real estate market in December of 2023 and break down the price of a single family home, a townhome, and a condo. And make sure you stick around until the end because I'll let you know if we're in a buyer's market or a seller's market, maybe somewhere in between, and what that could all mean for prices going forward. I'm Tyrell Boake, a realtor in Kelowna, and if you're new to the channel, I help you navigate the real estate market and provide you with useful information so you can make informed decisions that make sense for you. If you'd like to stay up to date on the Kelowna real estate market, make sure you subscribe to the channel so you don't miss out on future update videos, and hit the like button so that other people like you can see this video too. The Kelowna real estate market just finished 2023 with the fewest transactions that we've seen in a decade. Higher interest rates and decreased buyer sentiment certainly had an impact on the number of sales that happened in the region over the last year. But what impact did that have on prices? Let's take a look at what happened in the last month of the quietest year that we've seen in recent memory. If we take a look at the sales volume, December finished with about the same number of sales that we saw in 2022, but certainly below the number of sales that we saw pre-pandemic in 2019. In fact, 2023 had the fewest sales that we've seen over the last decade, and it came in at just over half of what we saw in 2021. We have to remember that 2021 was a record year in Canadian real estate, but we certainly finished below many of the previous years before that as well. And taking a look at active listings, we're sitting just over 2,500 active listings to finish the year, which is about the same that we had in 2019, and certainly more than we had in 2022, and almost double what we had in the year of 2021, which was a record year, as I said before. The benchmark price of a single-family detached home in December came in at $966,500, which is down from November's benchmark price of $991,000 by 2.5%. That's a significant drop in 30 days. And if we take a look back at what the benchmark price was in December of 2022, we are down 3% year over year, with most of that decline happening in just the past 30 days. And if we look at the benchmark price over the last 3 years in single-family detached homes, we can see that if you take out the two bubbles, prices have been relatively flat since 2021, but we are still up significantly since 2020. Taking a look at the townhome market, in December 2023, the benchmark price of a townhome was $731,000, which is down 3.2% from the $756,000 we saw just a month ago. Taking a look year over year, we're basically at the same point we were at in December of 2022, at $731,000 compared to $733,000. Again, if we look at the benchmark price over 3 years, you can see that it's been relatively flat if you take out that bubble that happened in the spring of 2022. In the condo market, the benchmark price in December of 2023 was $480,800, which is down from the $496,000 we saw in November by 3.1%. Again, a significant drop over a 30-day period. If we take a look at the year-over-year price, again we are down from $498,000 in December of 2022 to $480,000 in December of 2023, which represents a 3.6% year-over-year decline. Again, most of that decline happened in the last 30 days. If we take a look at the benchmark price over the last 3 years, you can see that it's relatively flat outside of that price increase that we saw in 2022 and the price increases we saw throughout the middle of 2023. We have given back all those gains that we made, and the price is now lower than it was to start the year. The average days to sell on market is about 62 days for a single-family detached home, 52 days for a townhome, and 53 days for a condo. And on average, homes are selling for 94% of the list price. If we take a look at months of inventory, you can clearly see that in all three asset types, we are in a buyer's market, with single-family homes having 10 months of active inventory, townhomes having 10 months of active inventory, and 11 months of active inventory in condos. Remember, anything from 0 to 3 months of active inventory would be considered a seller's market. 4 to 6 months is considered a balanced market, and anything over 7 months of available inventory would be considered a buyer's market. And as you can see here, we're clearly into a buyer's market in Kelowna. Now, it's hard to take that as a snapshot in a vacuum because it's only 1 month and sales activity usually drops off, but this is having an impact on prices. Being in a buyer's market is putting a downward pressure on prices. We'll have to see if this continues throughout January and February, and I suspect as we get into the spring market and sales activity picks up, especially if Bank of Canada holds their interest rate at the end of this month, or we even see a lessening of the interest rates, the more buyers will come into the market and eat up some of this inventory. But I suspect for the next few months, we're certainly going to stay in a buyer's market. The last thing we should take a quick look at is the list to sale ratio. In single family detached homes, we saw a list to sale ratio of 66%, meaning that just over 30% of homes on the market are not selling. In the townhomes, we saw 46% of the listings sell, meaning again, over 50% of the homes aren't selling. And in condos, we're at 51% list to sale ratio. 48% of condos listed on the market aren't selling right now. That is your market update for the Kelowna real estate market for January 2024. Let me know in the comments below what you think is going to happen over the next couple of months as we head into the spring market. Are prices going to continue to decline? Or is there a lot of pent-up demand, and as interest rates decline, are we going to see activity pick up again and put upward pressure on prices? Thanks for watching, and we'll see you next month for another monthly market update.